Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, you know us by now. We are the freaking Dividend Diplomats, recording videos about our journey to financial freedom. That's what it's all about. So today, what are we going to do? We're going to talk to you about a bank people have been asking us to cover for a long time. This isn't just an ordinary bank, though. They're an online internet bank yielding nearly 4.5%. Today, we're going to give you our thoughts and tell you if we think they are an undervalued dividend stock to buy right now.
Guys, if you haven't already, subscribe to the channel, give this video a nice thumbs up. We're actually going to put out a little challenge there. If you subscribe, like, leave a comment below, we get to 400 likes, we're sending some DD swag your way. Whether it's a sweatshirt, coffee mug, t-shirt, you name it, you got it. You know, you might see a comment from us to say, hey, send us a message to our email address. So let's get this fire going. Let's get this community roaring. Hit that subscribe button. Bert, we got a nice big bank stock to talk about here today. I know you love the financial institution industry. Can't wait to reveal the stuff we're about to talk about here.
Yeah, not just me. You love it too, Lanny. Let's not pretend like you don't love this institution here.
I love it.
Yeah, this bank, this one has been near and dear to our heart because on our blog, we've talked about one of their products extensively on our blog is one of our financial freedom products. And their high yield savings account, what we call a financial freedom product. We'll put a link to it below here. Just any app, website, that will help you increase your income or lower those expenses. So this one was a staple for both of ours for a long time until I left them, but Lanny stayed true. We are talking Ally Bank, ticker symbol ALL. Why? The product we're talking about is that Ally High Yield Savings Account with a 3.3% current APY on there. So it's just an account that we've used, and they have leveraged this online savings platform to grow their business tremendously, haven't they, Lanny?
Oh, they have. I mean, if you guys aren't on one of the higher yielding online savings accounts, if you're not aware about what Ally brings to the table for putting your money to work and earning some sort of dollars, Ally has definitely been a name in the industry, but Ally is also one of the biggest players, as we'll find out, in the auto lending industry. I mean, Bert, this bank is over $180 billion, I believe, in total assets. You can correct me if I'm wrong there.
You're right, Lanny. They are 186 billion in assets. And you know what? That puts them in the cream of the crop for the largest banks here in the United States. They're in the top 20 size banks. So this isn't some small community bank that we do love that offers great yield. There are plenty of them in our portfolios. Check out our portfolio, also linked down there. This is a massive top 20 bank. So of course, we're going to now take a look at them and see if they're undervalued. But there's a lot that's going to go into what we're going to look at. So first, throughout the remainder of this video, we're going to talk about their latest earnings release that was as of September 30th. There's going to be a new earnings release coming out here in the next few weeks that'll be very interesting as well. We're going to talk about the loan composition that you mentioned, Lanny, the auto loans, some of the performance of the bank, just a few other bank metrics that we'll take a look at. And then we're going to run them through the famous Dividend Diplomats stock screener. Lanny, what are those metrics of our stock screener?
As we focus on the three simple metrics, the price to earnings ratio less than the S&P 500 and competitors. We look at the dividend payout ratio, preferably less than 60%, in that sweet spot of 40 to 60%. Then we look at the history of dividend growth because we want that dividend income stream to grow. That's why you're here watching the videos. That's why you're saving your money, investing your dollars to build that passive income machine that we like to call the dividend stock portfolio. Let's go Ally, ticker symbol ALLY. This stock is actually up 11% year to date.
That's right. So let's peel back this earnings. Let's start talking through them. All right, let's take the first step. Let's start revenue. Let's start top of the income statement here. Their Q3 GAAP revenue, just over 2 billion. Don't need to put the decimal in there. It's just over 2 billion, which I thought was actually kind of interesting. It's a lot of freaking money, but it's actually from Q2 was a little bit more. So it came down a little bit. It was like 2.1 billion in Q2. Q1 2021, 2.1 last year. So it's interesting that compared to last year, it went up, increased, but it's like the revenue went up from Q3 to Q4, and it's just slowly trickling down, which I think is actually a kind of fascinating trend that you're seeing, especially in this rising rates environment.
Exactly, Bert. And I mean, What happens here though is they're rising their deposit rates, a lot faster than their, interest that they are charging on their lending consumers. That's what's happening in the industry overall right now. Because there's a war on deposits. There's no question about it. I mean, Capital One raises their rate, Ally raises their rate, Discover, Goldman, Marcus, SoFi. Ally has to keep up with that to make sure that they don't have a run on their deposits. But then they have to make sure that there's, enough consumers out there willing to buy property,
Yeah.
cars, etc., and have to do it at the right optimal interest rate as well.
Yeah, and I think that's also a fascinating piece here in this too, because if there's a slowdown in auto purchases, which we're experiencing in the larger macro thing, there aren't as many new loans for Ally to put on at higher interest rates. Then you have all of those old used and new cars that Ally funded during the low interest rate environment. So all those like 48, 60, 72 term loans that were at record low rates of 2.5, 3 point something, 3.99. Those aren't going anywhere. People are not going to be running off to refinance those old loans anymore, because why would you refinance into a higher rate? That doesn't make sense. So they're not getting the refinancing activity to get into the new rate environment. So people are holding it lower. Deposits have to increase though, because they need funding. And then there are new loans that there aren't as many new loans going in at the higher rates because there's a slowdown. So it's like, it causes this weird mismatch in the income statement for a lot of these institutions, and in particular Ally right now.
Spot on. Yeah, I mean, that's exactly what's happening. Brett, I know you're probably about to mention, but the home loans portfolio is declining, obviously, with the whole industry right now. I think they're down about over 8% through Q3 of 2022. But hey, they're still generating a plentiful amount of auto lending. Yields are probably upwards. I think your article had mentioned over 8.75% interest rate on average over that or over the originated loans in 2022.
Yeah, and it's a large dollar too. It's still 12 billion of new auto loans going in there. So it's not as if there aren't any in there. And that's where Ally really benefits from being the top auto lender. They have over 23,000 dealers in their market. People still need to buy cars just because they're not the cheapest or the rates aren't great. People are still buying, they're still churning their vehicles. So hey, it's still going to happen. Ally is going to touch a lot of people, and if you need the car, you're going to look towards Ally. You have to do something,
Right.
even as rates are higher.
And 10% are subprime borrowers. As I think you mentioned throughout the review of the release. Obviously, with the increase in inflation, interest rates, and on the overall economy, this impacts borrowers though, because of their ability to pay back their debt. And we've noticed a nice pickup on Ally. I mean, I call it nice in quotes, but delinquencies and net charge-offs are increasing, which means Ally has to increase their allowance for loan loss reserves or expected credit losses on those loans. So now that's also gone up, and they've recorded a crap ton of provision, about 133 million in Q3, to help cover what they currently expect to lose on their loan portfolio. But a lot of banks are doing that right now. They're padding up that allowance reserve more than likely to get through this, and then to say, oh, we don't need it actually, so let's reel it back and have great earnings again.
Yeah, it made me smile. We always joke around about this on here. Jamie Dimon's the expert at doing this. So if you just read JP Morgan's earnings release from this last week, massive new provision in there. Times are bad. This is what's expected. I guarantee you next year, when they reverse that provision, they're going to get that nice earnings windfall to help bolster JP Morgan's price. And a lot of places will do that. I'm sure Ally is going to do the same thing. But in this sector, with charge-offs jumping up, you can justify increasing your reserves, and it might actually be needed, especially because you have such a large portion of used auto loans, a large subprime piece of this too at 10%. Ally may actually need this. That's going to be the interesting piece.
I need this is what they're saying. I want my money and I want it now is what Ally is saying.
And the other funny thing at their earnings release is EPS just looks so bad in Q3 because they also had some other one-time noise that was going into it. So Lanny mentioned the provision of 133 million. They also had an impairment of 136 million on an investment they had in a mortgage originator. So they kind of got the double hit there from mortgages, where mortgage volume decreased, and then their investment in a mortgage originator dropped down too. So we'll keep an eye on that too. They had some pension adjustments and some tax expense evaluation against tax credits. There are smaller pieces that added what 20 some plus million, 21 million against earnings, but they all just took it all in one quarter. So be interesting to see if this happens, what's going to happen in Q4, because you expect more. I expect more provision to be in there. Who knows if there's more impairment left on this investment, and who knows if more tax credits are going to be impaired. So there might also be more noise in Q4 2022's earnings for Ally.
Yeah, I would expect this downturn in mortgage lending, which we should still continue to see, continues, that private investment in that mortgage originator more than likely is worth less. So anticipate maybe a little bit more. Maybe it's similar to AT&T's DirecTV investment.
Yeah.
Joking, all jokes aside. But yeah, I would agree. We should see an increase in provision in Q4 once that comes out on the earnings release, more than likely this upcoming week from Ally. But again, hopefully they're doing that to have a better, maybe it might not be a better 2023, but it might be a better 2024.
Yeah, and look, it's not all doom and gloom here. We've mentioned it. They crushed the online deposit accounts. They have over 134 billion in online deposits. They have over 2.6 million deposit customers. So they have a very large base of people that are staying with Ally to earn that high interest rate. I think from Q2 to Q3, their average interest doubled. It was 0.71% in Q2. Now it was 1.5% on the portfolio interest rate. I'm sure it's going to be, I wonder if it'll be over 2% in Q4. It should. It's just how fast rates have been rising, but it's such a large base that's cheaper than what it would take for Ally to borrow money right now. It's cheaper than what it would take for them to get money with the FHLB or to borrow from other institutions. So it's actually a really cheap deposit source for today. And you can flip the switch like this too. As fast as rates are rising, if the market turns south, they can easily drop the rate down too and still remain at the top of that market.
I'd be shocked that the second that the Fed says we're holding on the interest rates, that Ally just doesn't start dropping that rate like almost immediately. And that's the beauty of the savings account, not a CD savings account. Boom, they can control their cost of funds literally by just keying in something on their core system, and that impacts the whole thing right away, instantly.
Yeah, and it's a huge competitive advantage for a top 20 bank to have that at its disposal. SoFi is building it, but they're playing from catch up here. So that's why I personally like SoFi, because they're building this massive deposit base just like Ally has.
Exactly, guys. So we're going to look at Ally's metrics, but guys, pause here, subscribe, like, comment. You want to be entered into that drawing as we want to get to 400 likes on this video. Get yourself some DD swag. Let's bring it. Let's fire up this community. But we're talking about Ally. Again, ticker symbol is ALLY, keeping it easy. One of Bert's favorite type of ticker symbols there.
It is.
And Bert, they're only trading at $27.06.
I know. And then when you look at their EPS, it's $3.89 on Yahoo Finance. That's a decrease from where they are this year. So they're forecasting less earnings. It's a PE ratio of 6.96. But wait, that's not the only way to value banks. What's the main metric that you use to value banks here, Lanny?
You guys should really also look at the price to book ratio, which is really looking at the share price over the equity to see if that share price is trading less than what their equity is worth. So guys, if you see something at 1 or less than 1, they're trading below what their equity is. So if you look at this, their price to book is about 0.81x.
It's insane. Below book. That's why I invest in Citi. I like Citi because it's below 1. Ally is below 1 too. So let's look at the dividend payout ratio, because Laney and I did just talk about how there could be some earnings issues. The payout ratio is going to help you find out, is their dividend safe? Can they withhold a massive drop in earnings and still maintain their dividend and even grow it? We use 60%. That's what we start looking at for potential dividend cuts. If it exceeds and gets closer to 100%, our perfect ratio is 40 to 60%. So let's see where Ally falls. Ally's dividend is $1.20. That gives you a payout ratio of 30.85% right now.
Wow. Plenty of room to pay the dividend, plenty of room to keep increasing the dividend. If we look back, even at the last, time they increased their dividend, they went from 25 cents to 30 cents. If you do the quick little math there, that's a nice 20% increase that they announced, back in January of 2022. So I think we're all also patiently waiting see what they're going to do in January 2023 on the increase front. But to go into the, obviously dividend increases. They've been doing it for 6+ years. Average rate obviously is over 24.5%. Last one being, again, as I stated, 20%. Now, Bert, do you expect here, this week or next week, what type of increase do you think Ally will do here?
I don't think it's going to match that 5-year average of 25%. I'm expecting Ally to slow this down. I don't think this is the time for banks to start jacking up their dividend increase as they're hunkering down and getting ready for potential recession. That said, I could see it going from $1.20. I could see a what's it called? I could see a 2-cent increase, 3-cent increase. I don't think that's out of the realm of possibility, which is still great, by the way. And he's calling 3 cents. All right, that's what you're thinking here. So we'll see, everybody. That's the fun of it. And as you said, they've increased it for 6 years. So let's see if they can keep that streak alive. Even if the increase is going to be smaller than that insane one we saw last year.
Bert, here's the fun part here about Ally going into the dividend yield. We know that they're, as a customer, if you want to have your online savings there, they're at what, 3.3%. How does that dividend yield? Is it kind of, pretty similar? Are they one of the higher yielding big banks here?
Yeah, they are. They're yielding 4.43%. So as I said in the intro, they're almost at 4.5%, which is fantastic for a bank right now.
Oh, yeah. So guys, Ally, will put the screen up here. Again, P less than 7, payout ratio 30%. History of growing the dividends for over 6 years, double digits. We do expect somewhere around the upper single to double digit increase still this January of 2023. 2023 definitely is going to be a volatile year for all banks, not just Ally, with interest rates, with charge-offs, with provision. But hey, you can get a 4.43% yield there that seems to be very undervalued.
Yeah. So what are we thinking here? Obviously, Buffett likes Ally Bank too. He's invested in it. Berkshire keeps buying into Ally. So that's always a good thing for dividend investors to kind of follow Mr. Buffett here and monitor. But what are we thinking? We're not Buffett. We're the diplomats. We are the freaking dividend diplomats. That's what it's all about. The metrics look awesome. Lanny, I think you hit it on the head. 2023 is going to be rough for banks no matter what. In our latest video where we talked about our forecast for the year, is what I said I thought was going to be a sector that we're going to be able to find some value during the year. Ally is clearly showing signs of undervaluation right now. That said, they have that strong deposit base, which is always great, but there are some things in their lending portfolio that are causing me to take a wait and see approach. I want to see what's going to come out of this earnings release. I want to see the quality of that loan portfolio, because if it keeps increasing, we're going to start seeing the impact of rising rates and a potential recession. It's going to start slowly trickling out here. It's not going to be immediate. So if you keep seeing a large jump up in loan quality, what does that mean for the rest of 2023 if consumer habits only continue to deteriorate? That's what has me concerned, and that would obviously impact earnings and future dividend growth too.
Yeah, and it's always nice to watch and read, see what the earnings call transcript looks like, see what management thinks, going forward into the next year to 2 years. Guys, what are you doing with Ally Bank stock? Are you buying Ally right now in 2023? Do you think this is a good stock to buy right now? Let us know in the comments. Appreciate the feedback, appreciate the commenters as well for wanting us to do a quick video on Ally Bank stock. Again, I think they have all the great metrics. They have enough room for safety as well for dividend investors. So I don't really see that the risk is there on the dividend side. But I always say past dividend history results usually doesn't predict always what the next dividend increase will be. A lot of dividend stocks are like that. A good one is AbbVie. They used to fire it up on all cylinders. Now they're in the mid digits because, hey, that's kind of the nature of the game here. But you look at the long term, Ally, that platform, I don't see going anywhere. 180 billion in assets. I mean, I know plenty of people that have their money on there.
Yeah. So again, let us know, subscribe to the channel. And again, what was it, Lanny? We said subscribe, comment, and like the video. That's going to be how you enter this contest. Please make sure to do so. Everybody, remember, if you're not with us, you're against us, baby.
That was Bert, the Herd, and Lanny from the Dividend Diplomats, over and out.